Student loans can be useful for filling financial gaps when scholarships, grants, and other forms of aid fall short, but the money isn't free. In addition to your principal balance, the amount you originally borrowed, student loans carry interest rates. These interest rates determine how much money you'll ultimately owe and will also influence your monthly payment. Compare interest rates before taking out a loan to ensure your debt will be manageable once you graduate. Federal student loans for undergraduates currently have an interest rate of 4.99% for the 2022 and 2023 school year, while graduate students have interest rates of 6.54% or 7.54% for unsubsidized loans or direct plus loans, respectively. Private student loan interest rates range from 2% to 14% and are based primarily on your credit score. How are student loan interest rates set? Federal student loan interest rates and private student loan interest rates are closely related. When federal student loan rates drop, private student loan rates are likely to follow. This is because both types of loans tend to follow larger economic market trends. Federal student loan interest rates. Each spring, Congress sets federal student loan interest rates based on the high yield of the last 10-year Treasury note auction in May. New rates apply to student loans disbursed from July 1 to June 30 of the following year. Federal loans are fixed, meaning that the rate will not fluctuate for the life of the loan. The interest rate you receive on a federal student loan is not determined by your credit score or financial history. Interest charges differ between subsidized and unsubsidized loans. For federal subsidized loans, the government pays your interest charges for you while you're in school at least half time, during your grace period, and while you're in deferment. The amount you'll owe once you start paying includes only your original principal balance, loan fees, and interest accrued moving forward. With federal unsubsidized loans, interest charges start accruing immediately after funds are disbursed. If you choose to hold off on making loan payments until after graduation or your 6-month grace period, the accumulated student loan interest gets added to your principal balance when the loan enters repayment. With that said, interest rates on federal student loans are temporarily set to zero until June 30, 2023, or the current litigation over the federal student loans forgiveness program is resolved. Private student loan interest rates. Private student loans are offered by banks, credit unions, and online lenders. Interest rates vary from lender to lender. Many private student loan lenders provide both fixed and variable rates. If you choose the variable rate option, your interest rate will fluctuate according to market conditions. Most student loan lenders set rate ranges based on the LIBOR or the Secured Overnight Financing Rate indices. However, while rates are tied to this benchmark, private lenders also typically evaluate you or your co-signer's credit score, income, and financial history to determine your interest rate. Generally, the better your financial health and credit score, the lower your interest rates will be. In order to access this information, many lenders will run a soft credit pull as part of the pre-qualification process. This type of credit inquiry doesn't affect your credit and will allow you to see your potential terms and interest rates. However, if you decide to proceed with the application process, the lender will have to do a hard credit inquiry, which can knock your credit score down a few points, to approve you for the loan. To make loans more accessible, some lenders also factor in your work and academic history, potential future earnings, and more. How has the coronavirus affected student loan interest rates? When the coronavirus hit in March 2020 and the Federal Reserve Board cut interest rates, student loan rates plummeted. Federal student loan rates were at their lowest point in years, and borrowers could take out private student loans or refinance existing loans with rock-bottom rates as well. Also, federal student loan interest is waived until the ongoing litigation concerning student loan forgiveness is resolved or through June 30, 2023. However, sky-high inflation has forced the Fed to raise interest rates over the course of 2022, in an effort to keep the economy under control. These rate increases drive higher interest rates across sectors. Federal student loan interest rates are up more than a percentage point for the 2022 and 2023 school year, and private student loan rates are also starting to rise again. Rates will likely continue to rise as 2023 progresses. Current student loan interest rates. About 92% of student loan debt is federal, with interest rates ranging from 4.99% to 7.54%. Average private student loan interest rates, on the other hand, can range from just under 4% to almost 15%. While federal student loan rates are the same for every borrower, private student loan rates range based on the lender, the type of interest rate, fixed or variable, and the borrower's credit score. Direct unsubsidized loans. Who pays interest costs? The borrower. What's the lifetime maximum limit? $31,000 for dependent undergraduate students, $57,500 for independent undergraduate students, and $138,500 for most graduate or professional students. Do you need to demonstrate financial need? No. Who can borrow? Undergraduate students, graduate students, and professional degree students. Are there extra costs involved? 1.057% fee for loans disbursed on or after October 1, 2020, and before October 1, 2023. Direct subsidized loans. Who pays interest costs? The U.S. Department of Education pays interest while the student is enrolled in school at least half time, during the 6-month post-graduation grace period and during deferment. The borrower pays interest during regular repayment periods. What's the lifetime maximum limit? $23,000. Do you need to demonstrate financial need? Yes. Who can borrow? Undergraduate students. Are there extra costs involved? 1.057% fee for loans disbursed on or after October 1, 2020, and before October 1, 2023.